Good morning everyone. Today I am here to discuss a common doubt raised by many of my NRI clients regarding how taxation works when an NRI sells a property in India, especially a long-term capital asset. Let's get straight into it. When an NRI sells a property in India, the buyer needs to deduct TDS. TDS is nothing but tax deducted at source. In case of a resident, the TDS is applicable only when the transaction value is above 50 lakhs. But in case of a non-resident, the TDS is applicable on any amount. And the TDS rate applicable currently is 12.5% plus cess on the full value. And in case of higher value transaction, a surcharge may also be applicable. In case if you are confident that your capital gain at the year end is going to be on a lower side, you can apply for a lower TDS certificate or a Nil TDS certificate from income tax authorities. This option is already available for you. Now, after paying the TDS, the buyer's responsibility is not over. He has to file a TDS return, which is to be filed after the end of the quarter. If that return is not filed, the TDS deducted will not be reflected in your PAN, which will complicate your income tax return filing. In case you want to repatriate this fund to abroad, you must obtain 15 CB certificate from a chartered accountant. Once you submit this certificate along with 15 CA to the bank will allow you to transfer the money from your NRI account to NRI account or to your overseas account. Your final responsibility is to file an income tax return at the end of the year. While filing, you will be showing the sale consideration and reduce your cost of purchase and other cost of improvements. You will have a surplus which is known as the capital gain. You will have to pay 12.5% on that capital gain. Now, since you have already paid the TDS on the full value and now your final tax calculation is on the surplus which is on the capital gain, you will have a major refund available from the government. Now with that, let me recap all the points. So TDS is compulsory for NRIs and the buyer must file a TDS return. You have to file an income tax return at the end of the year. And in case of repatriation, you must obtain a 15 CB certificate. I hope I have clarified many of your doubts regarding immovable property sale in India. And if you have any further doubts, please share it in the comments and I will try to respond to it. Thank you for watching.